Hello traders, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alparo Research and Analysis, and this is Daily Analytical Report. First one this week. Last week we didn't have, we had one. That was it because I was on a business trip to Philippines, to Manila. But now we're back and there are some decent trading occasions on the market. Actually, I have some good positions as well. I opened them last week. They are pretty successful now. I can tell you I have a nice position on gold, but I will show you that a bit later. Now let's see the calendar because it's the first meeting this week. So we need to know about the data which will be shown this week, and it's all about only one number. So on Wednesday we will have CPI from US because now we are every market participant is wondering how many interest rates will we get this year, 2 or maybe 4 or maybe 3. We'll see. Higher inflation will put pressure on Fed to rise interest rates 3 or 4 times, and lower CPI should be negative for American dollar and should remove those expectations about rising interest rates more than 2 times in 2018. This data here, CPI, as you can see, year-over-year data, 1.9 is expected. Previous number was 2.1. Anything higher than 1.9 will be definitely positive for American dollar, and lower inflation than expectations will be a negative factor. It's all about CPI on Wednesday. There is only one number that matters this week, but also we do have other readings. Let's start from the very beginning, right? On Tuesday, in 27 minutes, we will have CPI, but from Great Britain, also retail price index, also important. So inflation and retail price index from Great Britain. Expect higher volatility in 27 minutes on sterling. Stay safe on the market. If you have a position on British pound, I think you should watch closely what's going to happen during that. If you have a nice profit, maybe it would be a nice idea to protect this profit somehow, close half of the position, or maybe move the stop loss to the break-even point. If you don't have a stop loss, well, that can be a huge problem for you, and a larger movement on the market can be, especially against your position, can be very, very dangerous. On Wednesday, what do we have on Wednesday is GDP from gross domestic product from Eurozone. We are expecting 2.7 on a yearly basis, and quarterly we are expecting 0.6. We'll see what the data will bring us. We mentioned about CPI, remember the most important one, the most important data. And on Thursday, data from the job market from Australia, and on Friday a speech from Reserve Bank of Australia governor, which also should be influential, but also retail sales from US. So maybe this week is not so busy, but this one data, well, currently I think that inflation, and not only me, but most of the traders think that inflation is the most important data. For the traders, not non-farm payrolls. Non-farm payrolls were important since 2008, when we were waiting when the job market will pick up and if we are having a recession or recovery. So non-farm payrolls was important, but now everybody knows that jobs are being created. Even if for 1 month we will have a drop, it does not mean anything actually. So non-farm payrolls, well, it's a tradition that it's important data, but currently it's not. It's not. Currently, it's all about interest rates for the past year or maybe two. Non-farm payrolls are a bit less important, and all the attention is shifted towards the inflation CPI. All right, that being said, let me move to the charts. And on charts, we have few interesting trading signals. In general, what we can see today is a reversal from the American dollar. So American dollar is losing and is trying to end this bullish movement that we saw recently. You can see that especially on dollar index here. So we got a bullish movement since the beginning of February, actually since the 1st of February, 2nd of February, the dollar index was climbing higher. Why I do have those rectangles is because I was expecting, I was thinking that the price can make the same correction here, but apparently they don't want to do that. So let me remove those. So we had a nice correction from the beginning of the February, and there was a double bottom formation, not a classical double bottom because the second bottom wasn't lower than the first one, but still fair enough. It was quite good. The price failed to test the main horizontal resistance and started to go lower a bit earlier, and now we are aiming first horizontal support here. Once this support will be broken, that should trigger a sell signal for the American dollar. I'm sorry, but I don't think it will happen before CPI. I think that no technical signal, let me say it like that, no technical signal before CPI will be important, right? So even if we would have like a major trading signal before CPI, I think it can get cancelled, proven or cancelled tomorrow. That being said, I have to move to American dollar to Japanese yen, because here, if the price will close below this candle, below this horizontal support, that will be a major sell signal. But as I said before, that will be a signal created by the technical analysis day before CPI. If the price will close here, okay, fair enough. But the next candle from tomorrow can look like that, can be a bullish engulfing or like that, right? Because we'll close here, for example, and tomorrow we'll open here for the first part of the day. We'll stay here, but then, for example, CPI will be higher and dollar will go much higher. After higher CPI, dollar should be much stronger, and we would have a comeback, and that would be a bullish engulfing, so a technical signal. But the thing is that it would be a technical and fundamental signal. All right. So any signal created on dollar, created today before the CPI from tomorrow, shouldn't be like, can be considered. Okay, fair enough. You still can enter this aiming few hours, for example, so a short-term trade, but everything can change tomorrow, because none of the traders, absolutely nobody will care about the trading signal from today. Like, for example, we do have a sell signal, right? Let's imagine the price will close below the green area, and the sell signal, technical sell signal, would be created here. And let's imagine that CPI comes 3% instead of 1.9. Absolutely nobody will care about the trading signal from yesterday if we would have such a big reading, such a high reading. So that being said, don't go too early to on the market, on the American dollar, keeping in mind that tomorrow we do have ultra important data. So watch out for that. If we wouldn't have important data tomorrow, price closing below the green area would be a major sell signal for the American dollar to Japanese yen. And if you're not afraid about the fundamental movements, fair enough, you can use just technical analysis to open a short position here and with a stop loss above the daily candle, and that will be a legitimate trade based on the technical analysis, based on the price action. Gold. I do have a position here. I'm not gonna show you because it's on my live account. Obviously it's all truth, it's all legitimate because I'm showing this account on live trading accounts, live trading seminars. I'm showing you my statement, etc. Now we don't have live trading, we have daily analytical report. So I can just basically tell you what I'm doing on my account. Why I do have a buy signal, why I have a positive approach towards gold is that on Thursday last week we bounced from an important horizontal support here, $1,308. There was an uptrend and there was a correction, and this correction retraced 38.2 Fibonacci, right, of this uptrend. And we also aimed $1,307 per ounce, which was a horizontal support. First resistance, then after the breakout support. And price bounced from the combination of those two. Price went higher, and actually also they broke the midterm resistance here, this pink one, right? They broke it. So we bounced here, we broke this. And now for the full legitimate buy signal, what we are missing is a breakout of the upper line of the flag. Because currently we are inside of a flag. Flag is a trend continuation pattern, so we should see this trend being continued. And but for this, for the activation of the flag, we need to see a breakout of the upper line of it. So currently there is a buy signal based on this bounce, but there is no signal from the flag itself. S&P 500, the panic stopped. We are trying to find a meaning, a sense in that recent drop. We are trying to find an explanation. Well, we do have an explanation that's pretty easy, but I mean, media is trying to find an explanation for that. VIX is to blame. For me, just a typical situation when now suddenly, you know, VIX is to blame, but not many traders, experts were warning about that before. I know some websites which were warning about VIX being too low, and they were doing that a long time ago. But the mainstream media, they didn't mention that there's super low volatility on stocks for the past few weeks. But now everybody's talking about volatility. Yeah. For the technical traders, the sell signal, midterm sell signal was created here when we broke the first uptrend line. But okay, that happened. Fair enough. What's next? What's the plan for the next few days, the next few weeks? Well, in my opinion, as long as we stay above the green area, the sentiment is still positive. So as long as we stay above those two uptrend lines and 38.2 Fibonacci level, and we did not close the day below those two tails, we are all good. Everything is still good, and the price should be aiming higher. Look, that was just a panic movement caused by algos, caused by expert traders. They were waiting for this. They were buying, but they were keeping their hand on the sell button at the same time. And who got slaughtered here was obviously, as always, retail traders, retail investors, that they were buying on the top. But now But really, nothing changed overnight. There are the same market conditions as before. Companies are producing the same, selling the same. So the fundamentals did not change at all. That was just a panic selling caused by factors which come from trading psychology, not from the fundamentals. So if nothing changed, everything is pretty good. We are expecting that the global rise, that the global GDP will continue to go up. It means that recent drop is just an occasion to buy more with better prices, and that's what we are seeing right now. Now, traders' favorite, Bitcoin. Bitcoin is super careful in respecting recent horizontal supports and resistances. I'm not surprised because I'm following Bitcoin for quite a long time. But I'm very happy that Bitcoin is following the technical analysis. So let me show you that. Okay, I'm gonna use this chart. There was this resistance. After the breakout, it was a support and a support. Okay, so here it was clear that area around 11,000 is a strong support. So the price broke the support and used that as resistance. Okay, after the breakout, it was time to look for another support, and we found this one. Why? Because of the impulse equality and those lows. And the price respected it. Then tested 11,000 again as a resistance and used that as a resistance, really, to be honest with you, for the second half of September. Then we broke 8.7 and we aimed 6. Why 6? Well, you have answer here, because 6 was the resistance in October and a support in the middle of November. So after we tested another horizontal support, so 6, we tested 8.7 again, like here. And this is just a typical wedge. That's what we are seeing here. It's just a typical wedge, which should result in a further downswing. And actually the sell signal for Bitcoin is created right now. So we broke the lower line of the wedge here, and breakout of the lower line of the wedge triggers us a sell signal on Bitcoin. The potential target for this movement is 6. Right? So breakout of the lower line of the flag opens us a way towards $6,000 for one Bitcoin. And once the $6,000 for one Bitcoin will be broken, the next target is here, around 3,500. Here is the support on 3,300, let's say, and this is the impulse equality. This one, this one, this one. It's around $8,000. $8,000 downswings. Right, so this is our view on Bitcoin is, as long as we stay below 8,700, so this area, the sentiment is negative. The price breaking the lower line of the wedge here opens us a sell signal towards 6,000. Breakout of $6,000 for one Bitcoin opens us a way towards $3,500. So that's traders beloved Bitcoin. Now, FTSE, as I showed you S&P 500, we defended important support. FTSE did actually the same. So they stopped the reversal on ultra important horizontal support on 7,100 points, this blue area. And also, as long as we stay above 7,100 points, the sentiment on FTSE is still positive, we suffered a huge correction, yes, fair enough, but that was something, that was a nice shake-off. Many traders are probably very happy with that, and after that shake-off we still can climb higher. There's nothing wrong with that, to climb higher after that, especially that we will be American indexes will be leading this, and as we said, they like those V-shaped reversals. Next one is dollar index. I showed you dollar index, so the aim here, that's the aim. Australian dollar to Canadian dollar. Here we got a cancellation of buy signal. So here the price tested the neckline of the inverse head and shoulder formation. That was a positive test, and here the buy signal was created, but it got denied when the price came back below the neckline. And now we are testing the neckline for the third time, and that's actually a great risk. We have a great risk to reward ratio, because if you want to sell now, stop loss is relatively close, but the potential target is very big. Risk to reward ratio here is awesome, it's good, it's great. But I don't think that there is a proper sell signal here, to be honest with you. So that would be a sell position just for the sake of the risk to reward ratio. Why there is no proper sell signal? Because we tested this resistance twice. And after the second drop, we should see a continuation of this movement. But after the second negative test here, positive for sellers, negative for buyers, after the second one, we should see a capitulation of the buyers. But they are pushing higher again. So sellers are weak, they couldn't use this double victory here, which is questioning their power. Comeback above the green area instantly triggers a buy signal. New Zealand dollar to American dollar. Uptrend, flag, breakout of the upper line of the flag triggers a buy signal. Simple as that, guys, no fireworks, especially that New Zealand dollar to American dollar respects head and shoulder technical formations, reversal and trend continuation patterns. Because as for reversal, for example, left shoulder, head and right shoulder, as for continuation, flag, and another flag. I just want to check if we do have a Fibonacci level here. Well, not a surprise, right? 38.2 acted as a strong support. So there is a nice buy signal on New Zealand dollar to American dollar. But obviously, watch out for the CPI tomorrow. But I think this is kind of a trade which can bring profits before the CPI data will hit the screen later in the evening tomorrow. Well, for Asian traders, later in the evening. For European traders, later in the afternoon, and for American traders in the morning. Cables in a little bit worse situation, because here we also do have a correction. We're also trying to defend horizontal support, but we did not break the upper line of the technical formation, and we are below 38.2. But once we will finally defend the green area, come back above 38 and break the upper line of the flag, or of the wedge, So once the price will get to this red checkpoint, when the price will get to this red checkpoint, the very strong buy signal will be created. So we should wait for that. Euro to British pound, actually no good trading signal. WTI. So on WTI, I had an interview today to one of the magazines in Malaysia about the commodities and my view on commodities. Obviously, we had to speak about black gold, about oil, and I see a potential reversal towards 55.1, where there is this ultra important long-term level. I'm sorry, important level, $55.1 for barrel. I wouldn't mind price going there, and from there that would be a nice buy signal. But obviously you need to wait for the price action to show you a buy signal. So only the fact that the price is testing the support is not significant enough for you to open a long position. You should wait for the proper price action here. Once the price action will appear, once the price action will happen, and once the price action will be bullish, that will be a nice buy signal. Next one is DAX. And DAX, as other indexes, as I showed you S&P 500 and I showed you FTSE, defended strong horizontal support. In this case, breakout of 12,900 was a sell signal, but defense of 11,900 is a buy signal, right? So that was a sell signal which gave money, and that is a buy signal. Pin bar bouncing from 11,900 points is a buy signal for DAX. Australian dollar to New Zealand dollar. Oh, here is absolutely beautiful. I do have this position as well. What is beautiful here? Well, the beautiful is the uptrend here. We started after inverse head and shoulder formation, left shoulder, head and right shoulder. And then this uptrend ends with a bigger head and shoulder formation, left shoulder, head and right shoulder. If you're with us for some time or you read some books, you probably know that in head and shoulder, the most important part of this formation is a neckline. And broken neckline was a support, and broken neckline became a resistance. Here, it was positively tested as a resistance here. Second test again, and that second bounce from the neckline is ultra important sell signal, ultra strong sell signal. Sell signal will gain a confirmation. Let me change the color. Once the price will close below the orange area. Price closing below the orange area is a legitimate strong sell signal. Also, I would like to show you American dollar to Canadian dollar. Keep in mind that we have data for British pound in 1 minute. American dollar to Canadian dollar. What we had here was a rectangle. We broke the lower line of the rectangle, which was a strong sell signal, and the price did go lower. But after that we got a bounce, and this recent lower line of the rectangle was tested as a resistance. A broken support is tested as a resistance. Well, that's the principle of the price action. But also it was a downtrend line here. I think you can see that clearly. So there was a combination of downtrend line and a horizontal support. Price tested that with a shooting star, and that shooting star is a legitimate sell signal with a tight with a desirable risk to reward ratio, because stop loss should be after the above the head of this formation, and potential target is on the lower blue line. Now we have this data from UK. Let's see what the pound will do. I think the first initial reaction is positive for British pound, so I think we may have a better data from inflation, 3%. Well, it's higher, so higher inflation is well, it should be positive. for the British pound, and it is. You can see the price try to climb higher, and euro to British pound goes lower. So that's the situation on the market right now. Some decent trading setups, few ready trading signals, a few still waiting for activation, but I think we have more trading setups than recently, so I'm very happy with that. Thanks very much. In the meantime, visit our Twitter account and our website alpari.news, and now half an hour break, and after that we will have a webinar about price action, so my favorite style of trading.